Budgeting means making a plan. How much do I expect to spend? How much do I think that I'm going to have to put out for all of the things that are required for me to run this business? Cash flow management is different. It is, does the timing of the money that's coming in line up with when it needs to go out? I think about things like tax payments and the ability to know that the revenue that I'm getting in certain periods is going to match up for when my tax bill is going to come due. Now, real talk, I just really want you saving your tax money to the side every month. But as an example, you may have cash outflows that are not coming in at the same time as your cash inflows, and you want to be prepared for that. Expense control is really important. When you're making your budget, you want to be realistic about what it costs to run the business, but also trim the fat where needed. There are a lot of areas where you may be overspending, subscriptions that you're still paying for, or people that you thought you needed that you're not necessarily using for what you needed them for. And that can be not just like actual team members, but maybe even service providers that are providing more than what your business currently needs. Watch for that so that you are paying for what you need, but also so that you have the money available for other things that you might want to invest in for the business. Because the thing is, if you don't do this well, if you don't manage cash flow or you are beyond your budget, you have missed opportunities. You may have excessive debt because you're spending more than you make. You have debt to have to cover that gap. You may also miss growth opportunities. There may be places where you want to be able to get into that would build for more revenue for you down the line, but you're cutting it so close with your expenses, with your budget, with the way that you're managing your finances that you actually can't take advantage of those. One thing I tell everyone is to make a budget. Now, I'm not the best at this, especially personally. I do have one for the business though. And the reason that I bring this up is because at the very least, you want to have a realistic expectation of what it costs to run your business. That can backwards affect how you price, how you determine how many sales you're going to take on, and what revenue streams you have. So for example, if your business costs $10,000 a month to run, then you can't make $8,000 a month. And you'll need to figure out which switch you need to hit to make sure that you're making enough to cover those expenses and end up with a profit. In addition, if you listen to our episode about getting paid on time, which we'll link in the show notes, you also know that you need to get paid early enough to be able to cover all of the upcoming expenses. And so if you have good payment terms in place, you're getting paid in advance of the work or at specific milestones, you also have the opportunity to manage better because you're not always, again, in that crunch of just trying to cover expenses.